QuickBooks Pro Plus Desktop 2022 Adjusting Entry Depreciation. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the view drop down, the open windows list on the left hand side, company drop down, home page in the middle, maximizing to the gray area. Reports drop down, company and financial, looking at that balance sheet standard, customizing the report with a range change from 010122 022822. Fonts and numbers, changing that font, bringing it up to 14. Okay, yes please, and okay. Reports drop down again, company and financial, profit and loss standard with the range change 010122 022822. Customizing the report, fonts and numbers, changing the font, bringing it up to 14. Okay, yes please, and okay. Reports drop down, we're looking at the account and taxes, trial balance, customization with the range change 010122 to 022822. Customizing the report, fonts and numbers, changing the font, bringing it up to 14. Okay, yes please, and okay. For this one, we're going to be jumping over to the balance sheet because it might be a little bit easier to see the categorizations here. Last time we looked at the prepaid insurance. This is going to be similar in concept to the prepaid insurance, although a bit more complex in the details for the calculations of what the actual numbers will be when we do our journal entry. So we're looking at the depreciable assets, which QuickBooks categorizes as fixed assets. Those include like building, equipment, furniture and fixture, and so on. And we then have the same concept that when we pay for these items, even if we pay for cash, an extreme example is like a building. If we paid $100,000 for a building, even if we paid cash for it, we cannot just expense it because the difference between when we actually consumed the item and when we bought the item, when we paid for it, is so extreme that we still have to deviate basically from a cash basis typically and put it on the books as an asset and then allocate the cost over the useful life or as we consume the building, which is basically an accrual concept. And the tax code, if nothing else, will basically require us in some instances to do that. So this is one adjusting entry which we can't really escape usually, even if on a cash basis. So that means that when we make purchases of large items, furniture, equipment, buildings, and so on, we put it on the books as an asset, just like we did with the prepaid insurance, because we're going to be consuming it over the future. And then as we consume it, we're going to be expensing it over the point in time so that we're consuming it in a similar fashion as we did with the prepaid insurance. However, when you hear that, you might say, well, that makes sense, but why then would we have two accounts here? Why wouldn't we just say that when I decrease this, it's going to be a decrease to furniture and fixtures, and the other side's going to go to furniture and fixtures expense, for example, which we don't do. We have depreciation expense and this other accumulated depreciation. Why add that level of difficulty or complication? Why not just decrease them directly as we do with the prepaid insurance, which would be simply decreasing the prepaid insurance as we did last time and having the insurance expense account. And the reason is because the prepaid insurance, we know exactly how much is being decreased. We know what we consume because the policy is expiring. When we look down here, we don't know exactly what it is that's decreasing. It's a complete guess. We're going to say, I don't know, the building's going to last this long, right? The equipment's going to last like 7 years maybe, and then we'll try to depreciate it over 7 years. We don't really know. So that means, we're going to add another level of detail in our reporting, saying this is how much we purchased the furniture and fixture for in total, all purchases combined together, and this accumulated depreciation represents the amount that we have reported allocating the cost or claim the expense related to the depreciation, which also represents the theoretical decline in the value on a depreciated basis of the furniture and equipment, giving us a book value here and the more detail. So instead of just having this one number, 90,500, we now have this is how much we purchased it for in essence. This is how much we estimated it going down for and how much we claimed as an expense. And this is then the book value after that point in time. The other side then go into depreciation expense, which again gives a similar kind of thought process, meaning this is an estimate in essence, right? It's an estimate for the expense related to allocating the cost of these large pieces of equipment. The transaction, once you know that's fairly straightforward. It's just going to be a debit or an increase to the expense account, just like we did with prepaid insurance, but this time depreciation expense, and then an increase to the contra asset, which is basically a decrease to the asset account. These contra assets are basically kind of like we took the T account, if you've know accounting, like the increases and decreases in an asset account, go up with a debit and down with a credit, and we broke it out into like a 7 and an R, right? And now we said, well, it's going to increase on this side with the 7, with the increases on the debit side, and the R, like on the other side. We broke that out into another account and kind of have all the decreases. That won't hold true all the time until we make sales and stuff like that if we sell the equipment, but general concept. So that's going to be the idea. Then, now the next thing is, well, where do we get the number to know how much has been depreciated? Because notice that this number represents one lump sum number of a bunch of equipment that we've purchased in the past, and that subschedule can be quite complicated. It's something we generally do not track in detail in QuickBooks. We can track the items, but we might not track it in detail in QuickBooks. We might use something like tax software, which is quite common due to the fact that we're going to have to report this on a tax basis anyways. And if we get all this information into the tax software, then we can use the tax software to basically do the book calculation of the depreciation as well, if we so choose. So just note, if you work with your tax firm on the depreciation, the general idea then would be this. They're going to say anything in the past that I purchased, like in this case, the $75,000, we're going to assume was on the tax return last year. So they already have it on the books for the taxes. And then the current stuff that we purchase, which there shouldn't be too many transactions because these are large pieces of equipment, as well as the decreases, the disposals and sales, are the ones that we want to give to the tax preparer to have them add them to their schedule so that they can get the supporting schedule. So what that will look like on the tax side is something like this. You might see a schedule something like this. If we saw this, we're going to say, okay, and this is just an example schedule. So it looks something like this. This is a book depreciation schedule for all of the furniture and equipment. Now notice all of the stuff that we have represents the actual stuff that we're putting on our books in one lump sum number. This is like the subledger, the sofa, the chairs, the recliners, the coffee table, the benches, bookcases, and so on and so forth. And this totals up to the $98,000 here, which you could see is totaling our amount $98,000 here. So that should be kind of like a sub-ledger, right? And then the other side is the equipment, forklift, and the office printer. That's going to be like the sub-ledger here for the $5,000 that we have, given us the detail of it. So when we actually dispose of something, we know the thing that we are disposing. We know which item we are disposing. When you make this subledger, when you give this information to your tax preparer, if they just put it on there as one lump sum and say this is furniture and fixture and one lump sum, when you sell something like a piece of a couch or something, it's going to be very difficult to then calculate, which item you sold, and you're going to have to adjust the schedule. So what you want to do is put it on there piece by piece, so that when sales happen in the future or disposals happen, you can clean up this schedule. A good tax preparer should be able to do that, to help you, do that. Now notice this is on a book basis, which we're going to say is a straight line. We're going to try to use a straight line basis here, but they're going to calculate it also on a tax basis on the software. So that will be the default, of course, which is more complex. So when you look at the tax software on a tax basis, your decision on the bookkeeping side of things is, if I'm a small business, maybe I just want to keep my books kind of on a tax basis with regards to depreciation, because otherwise they have to record 2 depreciation schedules. Or maybe I think it's worthwhile for me to record my side on the book depreciation, another thing that you might want to discuss with your CPA or tax professional here. The reason the tax depreciation is different is because they use a similar method, but now they have a double declining method and a half-year convention. And then you also have these concepts of a 179 deduction, which is like you can deduct more in the first year. So the tax code is not really geared towards, in other words, reporting purposes that are to have display of your financial statements as accurate as possible. they might have other incentives like stimulating the economy or just, getting, it's a political thing or whatever. So we just follow the tax code of whatever it is. And so it's a little bit more distorted for bookkeeping purposes, but it might be the easiest thing to do. But if they put it in their books on a tax basis, most tax software also has the capacity, if they know how to do it, to then also record the depreciation on a book basis, and they can give you a schedule like this, so you can use it to record your depreciation expenses. Now, notice the tax software will have pretty clear-cut categories of depreciation categories, typically, like furniture and fixture, and the machinery and the equipment. That's why we, in prior presentations, used those categories. You don't have to. You could just use one big lump sum number if this is total purchases of furniture and equipment and one big lump sum number of accumulated depreciation. But if you're going to have the more detail, it's nice to have the detail that are going to tie out to the same categories of your subledger, which is going to be in the accounting software. So you might want to talk to the accountant when you're setting up your accounting and say what are going to be the categories of the purchase of the equipment and furniture and so on that are on the tax software that I would like to use as a subledger so that I can group my information in a similar fashion. We discussed that a little bit in a prior presentation. Now I'm going to assume all this stuff happened last year, which was 2021, and this stuff is the new stuff. So for example, if I took all these items, 15,000 plus the 23,000 plus the 12,000 plus the 5,000 plus the 2,000 plus the 3,000 plus the 7,000 plus the 8,000, we get to that 75,000, which you'll recall that if I go back on over and double click on the 98,000 here, the 75,000 was already on the books from last year, and this would have to be the information from the current year that we would give to the CPA firm that they would have to add in the current year and add that information here so the new stuff then that we give them would add up to the 7,000 plus the 3,000 plus the 2,000 plus the 4,000 plus the 5,000 plus the 2,000, which gives us that 23,000 that we see in the new items. So now we have everything on the books, and this 5,000 machinery and equipment, those were new items as well in 2022, representing a forklift and an office printer, just for example purposes. So then we got to think about the depreciation on these items. So here's the depreciation basis, the prior year depreciation. So this was in depreciation in the prior year. You can see that adds up to the 7,500. That's what we currently have on our books, 7,500, because we haven't recorded the new depreciation that we would like to report, not on a yearly basis, but this case on a monthly basis. So if I go back on over here, now we want to record the depreciation for this period, and we got the depreciation broken out into these two categories. So to do that, this is for a year, so these schedules are calculated to record depreciation for a year. So what I'd like to do is break it down to 2 months. Now it would be nice if I could record this 1 month in January and February, but I'm trying to make things just simply correct as of the cutoff date right now, which is the end of February. So that's going to be 2 months of data. So for example, we're just going to say straight line depreciation, 7 years. So for example, if I had this item up top at the 15,000 divided by 7, then you got 1 year's depreciation would be that 2,142 about. So that's how each of those would be calculated, and then we're just summing them up. So now we're taking the total depreciation for this time frame. This is the total depreciation for the machinery and equipment. So that's the calculation. So once we have this schedule, if everything lines up on this schedule, then the journal entry is pretty easy in terms of the accounts that are affected. These schedules can be intimidating, however, I can understand. So now what we're going to take, and we might only record this on a yearly basis if you're a small business, but we might want to do it on a monthly basis as well. We're going to do this again for the 2-month time period because our cutoff is February 28th in this case. So I'm going to take that 14,001, which is a yearly depreciation, divided by 12. That would be 1166.75 times 2 to get to the 2333.5. That's what we're going to record finally. Okay, let's do it. Let's go back on over here. It's just going to be a debit to depreciation expense, a credit to accumulated depreciation. We have an accumulated depreciation for the furniture and fixtures. That's going to be a balance sheet account, so we can use the register to enter it. We'll also take a look at it in terms of debits and credits, though, as well. So I'm going to go back on over and lists and take a look at our chart of accounts. And notice on the depreciation side, we only have one account for depreciation. That you could use that, or you might want to do the same breakout and have different accounts for depreciation. I'm just going to keep it at the one for this example here. Notice up top that we created these kind of sub accounts so that we have the furniture and the machinery, and then the accumulated depreciation related to them, making them sub accounts so that the system will show us the cost, how much the accumulated depreciation was, and the book value. Okay, so I'm going to let's start in the furniture and fixture. I'm going to double click on this register. Now these are tricky, you'll remember, because they're contra asset accounts. So that means that when I try to use a register, then the debits and credits are actually a little bit easier because it's an increase to this account is a decrease to the asset. So the decrease is actually what we want because they're trying to claim it's a decrease asset account because it's a negative asset account. In essence, it's a contra account. Okay, so we're going to say I'm going to close this out, and we're on 228, and let's see, this is going to be then, what did we say it was? 2333.5. So there we have that, and the other side is going to just simply go to depreciation. I'm just going to call it an ADJ entry, and there we have it. So it's up to the 9833.50. So let's open up this item, the caret, close this out, and then go back to our balance sheet. So now it's at the 933.50. Does that tie out to my schedule? That would mean that it would be the current depreciation and the last time, 7500, which is right here, last year, plus the current 14001, which would get us to the 21. Well, and then I'd have to, hold on a second, let me do that again. It would be the 14001 divided by 12 times 2 plus last year's 7500, and there's the 9833.50. So that looks good. And then the other side is going to be on the profit and loss in the expenses. And this is a significant expense now, which can make your net income go down a lot, which could be good for taxes, but bad for other things, like if you want a loan or if you're looking at it for trying to get investors to invest and so on. So then we're going to go back on over to the balance sheet. Let's do the other side, which is the machinery and equipment. So that's 833 for a full year. So I'm going to take that 833 divided by 12 times 2 for the 2 months, 138.83. Go back to my QuickBooks, and we'll go to the company drop down. No, I'm going to go to what did I want to do? The chart of accounts, lists, chart of accounts. It's open over here. And then I'm going to go to this one, double click on the accumulated depreciation for the machinery and equipment, taking us into the register. And we're going to say this is on 228. This is going to be a decrease again of 138.83. Other side's just simply going to depreciation expense, and it's going to be an ADJ entry. So there we have it. Let's open up the caret, close this out, and go back to the balance sheet. And so now we see this other category, this new account has now popped up. It wasn't there before. So now we got this drop down that we see, and we got the 138.83, which should be the same, should tie out here. So that looks good. So then you could now collapse these, of course, and say this is the book value, just showing the book value for each of them, the way we set it up with the sub account. And then you can provide the more detail saying, this is how much we purchased it for. This is the depreciation thus far for the life of it. This is the book value. Same with the machinery and the equipment. If we go to the profit and loss side of things, we got the expense, which once again is significant expense. We're still got income over the 2 months. That's nice. And then we're going to double click on that expense. And so there we have it. Let's take a look at one of these journal entries, double clicking on the journal entry, double clicking on the journal here. And we can see the journal entry is straightforward with simply a credit to the accumulated depreciation, a debit to the depreciation expense. It's really the categories and getting that subledger calculation and working with the tax professionals to make sure that you'll have all that set up where the confusion actually often lies. Save it and close it. And then I'm going to do the same for this second one. I'm going to close this back out and look at this one and just add the memo. Double click in here and add the memo. We need to get the memo. Did you get the memo? And so we're going to say save it and close it. It's an important memo. Okay, and then we could see these transactions on our journal report by going to the reports dropdown, accounting and taxes. We've been taking a look at the journal, and let's make the range from 03, let's say no, 02/28/22 to 03/01/22. And then I want to see only the journal type of transactions, customizing up top, filters. We're looking at the journal types. So transaction type and the journal. Okay. So now we have all our journal entries included with the memo, so we could see that they're adjusting and reversing entries and see that what we have been doing thus far, the ones we just took a look at, are these items on down below. Now note that these are not reversing entries. We're not going to reverse these. These are permanent differences, so we don't have to worry about any reversing entry related to them. If we go back to the trial balance, this is what we have thus far with regards to the trial balance. And you can check your numbers, see if they all tie out. If not, we're going to provide the backups. So hopefully if you want to rework something or something like that, hopefully those backups will be working for you to do so.